A very good evening to traders. Mark here from Daytrading Room. Time is 9:30 in the evening London time. I'm just reviewing my trades through August as we come to the end of the summer period, and it's been a while since I've actually done a video for the blog, but this particular trade on the 15th of August, this particular trade setup or sequence of trades, I want to put this on video because out of the whole of the month, I think this is the most interesting from a point of view of having a plan, going in, taking the trade, taking the loss, taking the profit, and managing the trade, and just seeing how I scaled in and out of the position, the whole thesis behind it, the whole management of it, from start to finish. Summer traded very lightly. My strategy has been look to see what's going on. If there is a potential opportunity to trade the opening hour, then do so. If there's not, set some alerts and go and do something else for the day. That has just been the method that I've chosen to do this summer, purely because the market tends to do bursts and change from extreme moves that just stop, then go into range bound for the next few hours, and then another extreme move and then stop. You don't get that fluid motion that you often get in the run up to Christmas or the Easter period, or some more active time of the year. So just personal choice. I know there are guys who are sitting there who are making scalping all the way through the day, fading the ranges and what have you, and there are definite strategies to use for the quieter markets. But for me, just this August, I've just looked to capitalize on if there's been an active day, I've traded it. Otherwise, I'm just going to wait, and I've been planning and looking forward to September. So let me run through this trade. This is, I think, the most interesting trade. There's another gold trade as well that I may review, which was a very similar type of trade. But let's talk about this Dow one first. Right, we can see here we've got the 15-minute up here. Let me bring it into the period I'm talking about. Let me just zoom that out. Okay, so this day we're talking about right here, this one on my cursor, the 15th of August. It was a big gap down, and it was a big gap down out of a multi-week range. Hopefully you can see that. A big gap down out of a multi-week range. And so I'm looking to put my large opening gap strategies into action. Let's just make sure we've got the right day up here so we can see. So this is the 15th of August right here. So this is the gap down here on the 15-minute. And I've got it here on the 1 minute here already zoomed in. Now, my premise on large gap days, now I've got a big thing on my trade plan right in front of me here. I've got it here for the 15th of August, and it says in big letters across the top, summer, because regardless of what you expect the market to do, what the conditions of the market are, how appealing it's looking at the open, recognizing that it's summer, that it's low volume, that at any point the market can just change from being can go from one type of condition to another. So very wary of that, very cautious about getting overexcited with it, and trying to be very precise with the entries. And this is where the tape reading comes in, not only for the entries and the exits, but for recognizing when the conditions have gone from a continuation drive type trade to a complete flat line, no one's in charge, and there's no edge for taking the continuation strategies. So here are the trades. I'm going to bring these in. I'll just cut and paste these from the statement, and I'm going to bring them in. If I can just grab hold of them. Right, there we go. So these are the Dow trades. Now the ones particular I want to talk about are these from the open. This bunch here specifically, going up towards sort of 3 o'clock, the first half an hour. These ones afterwards, you can see they were completely later in the day, and both losers. In actual fact, that's just me testing the water, and with a small size, and realizing, hey, you know what, this isn't working. There's nothing here. Small losers, probably give back $100 or so. So but the ones I really want to talk about is this opening hour. It's 9:30. It's opening half an hour, 9:30 to 9:55 period here. So we're going to come back and revert to this this statement from time to time. But I want to talk specifically more about the chart. The actual specific entries aren't so important as the premise. So big gap down day. what I'm looking for. I've talked about this before, and those guys who have, if you've watched more of the videos, you'll know I've said this many times before. I've got a couple of ideas, especially with gaps right out of a 15-minute range and we're way below it. I'm looking for one of two things. I'm looking for a little drift up that just pauses on the tape, and then I can go short and look for a drive through that low, and a nice continued drive, maybe a pull back and then a push to lows. So that's the first one. The second one is just literally hammering straight off the open, a pull back, a drive lower. And number three is a complete reversal where it pushes up, pulls back and pushes up. Now I'm not, and in this instance I'm not interested in that. Normally I'll be open-minded to that, but in this case I'm only looking for always number one or number two. In other words, the drift up, the hammering, or the hammering straight off the open. Now we're never, as you can see from this chart here, we didn't get either of those very specifically, but we got a little bit of a combination of the two. So markets are never going to do, very rarely they do exactly what you want them to do. It's always nice when you do see exactly what you want, because you can get on the end of it, you can take your full size position, and you can reap the rewards of being right with the premise of the trade and with the execution. But often things don't do exactly as you'd like. So, and this is what you're going to see when I talk about each individual trade here. I've lost my cursor. Where's my cursor? There we are. Okay, so the first trade for me was, let's bring this down here so we can just see it, and I don't want to hide the ticks, but the first trade here was selling pretty much 10 lots off the open in 2 5s as we open. So the opening bell, I literally saw the opening bell, and in the first couple of seconds I just saw that tape coming in blood red, the selling coming in, the expected response, the downdraft on the time and sale on the dome, the red on the time and sales, all the things to talk about in the program. And just straight away I know I want to start building a short position. Let's just build this position up. So we hit 5 contracts here at 15,171, and we get a immediate downdraft. We get a little bit of a pause in the tape, and then sort of 20 seconds later or so here I do another 5 contracts. We get that push lower, and this is all within the first minute or so, guys, just after the first minute. We push lower, and we just see a bit of a stall on the tape. So the exits there, 56 and 59. Let's just have a look what happens here on the tape. So the low here in the first minute, this is a 1 minute candle, is 56. Actually, if I expand this, we'll be able to see this clearer. The low on there is, in the first minute, is 56. And that's pretty much just after the first minute. That was where I trimmed out the first 5 contracts or so, and then as you can see the market just starts to lift up a bit, excuse me. So I take out another 5. Okay, so there goes the full 10. Because why did I take the whole lot out there? Why didn't I hold it when it just looked like it was just could have rolled over again? It didn't act as I wanted. If I'm getting aggressive and I'm taking the immediate short right off the open, I want to see this, especially if I'm going to add to the positions like I was doing. I want to see this drive, pause, drive again. Okay, got the initial drive, the pause came in, so I take some risk off the table. I wait. It looked like it was about 10 or so seconds, and then we started to push back up. That's not really what I wanted to see. Now bear in mind, very quickly mention these, the ticks looked absolutely awful, and these will come into play a little bit later when I talk about the next trade, which was here. I consider these all one trade, by the way. The premise was to get short at the open. The fact that I'm trading in and out of the position, the fact that I'm trying to build up a position and then scale out of it. Ultimately my goal, by the way, is to build up a position, a full-size position, and get that move that I'm after. So I'll be scaling in. This is a little bit of a different strategy for me, and it's one that I'm implementing specifically for the summer because of the rotational nature of the market, because you know, we go from that period of extreme moves to calmness. Now you've seen me before, I talk about it. I'm most of the time I will fine-tune the entry and looking to go all in, but this is a slightly different strategy where I'm just adjusting it to suit the conditions, and I'm staggering the trades, entries and exits to suit. So I didn't see that absolute downdraft straight away. It lasted for about a minute, and you can see, you know, I ended up taking the trade all out basically in the last. You can see the last 3 were actually, as we popped up a little, just 1 tick higher than the last entry. So then I'm just looking and seeing what the conditions are, and I realised that maybe it was a little bit premature there. So I go in again, I take another 5. Immediately doesn't work for me, I come straight out. That's the key to it. When I don't see that follow through on the tape after the initial entry, the last thing I'm going to do is add another 5, another 5, another 5. I come out. I can always go back in. I don't care if I go back in 20, 30 ticks lower. If the setup is there, if the tape looks diabolical and I can see a good risk reward place to enter the short, then I will go in lower. That's the most important thing for me, is that the price action is matching the way, is matching what my thesis for the trade is matching the conditions, and everything's lining up. If it's not, I'll come out, I can go in again. So here you can see a couple of tick loss, and now this is where I start to build the position up. Now, why did I spread it over such a wide thing? You can see we've got 3, 6, 9, 12, 15 contracts shorts over a range of prices from 54, 71, 65, 52. So you can see as the price starts pushing up, I take one ad. I'll show you why I did that. It's a very rare thing for me to do, but as we then started rolling over, that's when I start getting aggressive and I'm trying to build that position that I've been looking for. Now, why did I do this? This specific candle here is the one we're talking about. The reason I did this is because the market looked absolutely awful at this point in time. We've gapped down heavily. We're gapped down 130 points or so. Ticks are dreadful. Volume here, look at this spike up here. You can see the spike up here. It's tried to push up. It's 24 tick range. It's a big range, but look at the volume on it. There's absolutely nobody interested in that whatsoever. It's just a pure manipulative shove. So when I took that short, I'm just trying to leverage on that and trying to say, listen, if I can find the top of that and get short, then great. Now the high was 76. The best entry on that was 71, but as we start to roll over, 65, 52, 54, I'm pressing the short, thinking this is the pop that I'm after. We're now going to drive to lows. And then as we start rolling over, I'm just scaling out. Now the only reason at that point in time where I'm thinking, okay, I'm just going to scale out this, is because the ticks are just, even though they're awful, they were starting to just push up. So the last thing I wanted was to be caught in and be adding too low down. So if I'm not adding, I'm going to be taking things off into pulses lower. So just bringing these in, that's not so important, is it? But we'll just 49s, 49s, 50s, 37s. This is the bulk. You can see the bolts coming out here, 37s and 36s. Alright, so if we look at the tape here, the low of that candle was 35. So I just saw that stall on the tape. Again, it's all about the time of sales and the depth, and combine those two with the price action. I just see it's not going any further. Yeah, it's just that obvious unexpected response that I talk about in the tape program. Guys, if you've done that will know what I'm talking about. It's just seeing that, and it's just not going anywhere. So I'm quick, I'm there, and within 4 seconds I'm dumping almost half of the position, 36, 36, 37. Now I keep a small little trailer in case we pop up and then roll over, and I can re-add and build that position back up. It didn't happen, so I ended up taking out of 41s and 44s on this push back up. Nevertheless, it was an okay scalp trade. I didn't get the complete flush that I was looking for. I was looking specifically for a really big flush, but at the end of the day, the tape is telling me when to get out of the trade. I'm in the trade. It's a profitable trade. My best entry was 71. I've had some at 65s. It's rolled over now in the 30s. I can't look a gift horse in the mouth. I had 12 contract position, sorry, 3, 6, 9, 15 contract position, and when the tape's telling me that I've got to trim some, I've got to trim some. I don't want to see it pushing back up. And I'm still in the vulnerable part of the trade. We haven't rolled over. If we'd rolled over fully and started to flag here, I can afford to be a little bit more flexible. It can come back up to here and roll over again, and it's not going to be that much of an issue. But the fact that it just hit that brick wall there of buying temporarily, I had to come out. Yes, we did subsequently roll over, but the premise of the trade by that time has disappeared, and after that you can see a few little, the drawing pen stopping me from bringing the screenshot in. After that you can just see, after it came out of all that trade, there's not much else going on. I take it up another 4 contract position, we roll over. That's a profitable trade. Taking 2 off at 37, just literally scalping it out. A little loser there by the look of it, a little winner here, but the point of the matter is these are all small positions. They didn't get an opportunity to build up the position, because by that point the premise of the trade is gone. Okay, I may still think that we're pushing to lows and I may still want to be part of it, but the actual thesis of the trade, which was the initial opening drive to lows, in my eyes, is game over when we saw that bounce from that low point there. Yes, we did roll over, we did have a nice rollover, but it's regardless of that, the premise of the trade was that it didn't work out exactly as I wanted, but nevertheless, it was a profitable morning. So if you can put in 30 minutes of work or so and make $1,800, some commissions, $1,600 net. I think I gave back about $100 in the afternoon with a small scalp there that didn't go my way. But I mean, ultimately, why I'm covering this trade is that was the premise. The premise was the gap was going to drive lower. I tried to work into the position. I built the position. It started to roll my way, and then the tape just said, listen, we're not going any further, and had to take out the position. Left it a little bit, we drifted back up, and then took the rest out on sort of like a trailing type stop. So even though the trade didn't work as I'd liked, I didn't get that 100 point drive, from there, the real panic, where I've been in a nice position and maybe been able to have more, really squeeze some juice out of it and make it pay. It didn't pay as much as I'd like, but nevertheless, just adapting to conditions, seeing what the price action is telling you at the time, adjusting the trade to suit, and not being stubborn with it. When realizing okay, that's all it's going to give you now. It may give you more later, but don't overstay your welcome, especially when in front of my face I've got a big thing that says summer. So we're not in a bear market. We have gap down, so being cautious and taking what's offered. So hope that's been of some use reviewing that trade. As always, keeping that risk managed, never letting you see a couple of the losers there. Couple of ticks, 5 ticks, 2 ticks, 3 ticks. That's only specifically at the open because it's a very, very extreme tape read. If it's not going my way instantly, I'm out. I'm cussing it. I'm not giving it even a minuscule of room. But that's only when we're in the conditions that warrant that. If you do that under normal conditions, the noise is going to take you out. So it's important to distinguish between the two. So I rambled on a bit. We're 17 minutes in, but I think it's an interesting trade to cover in a video. So take care, manage the risk, guys. Looking forward to some more volatility, some more volume coming in after the summer is over, and I will try and get some more videos up for you then. Take care.